Welcome back to the channel, MBS Mortgage Bro Science. What we're doing today, we're going to go over ARMs. Right, Sid? We're going to go over ARMs, an adjustable rate mortgage, and how they can help you have a lower rate. Like and subscribe.
Get a life, nerd.
All right, MBS Mortgage Bro Science, ARMs. Adjustable rate mortgage, okay? ARM. Okay. They're not for everybody, and there's inherent risk with an adjustable rate mortgage, okay? But today's date, I'm just kidding, this watch is broken. All right, it is March 26th. Where's Jillian? She's in Nashville? Yeah, 26th, okay? It is a high rate environment right now. It's actually not that high, don't listen to your boomer dad, but it is above, the 40-year moving average, okay, around 5.5%, okay? 30-year fixed is roughly 6.5 today, but our 7-year ARM is at 5.625 or 5 5/8, okay? Now, I'm not saying everybody should do an adjustable rate mortgage. What I am telling you is, if you can anticipate refinancing or moving or selling, or you're just strapped on cash and might not qualify for much on a 30-year fixed, an ARM is a viable option, okay? For reference, when I say not for everybody, yeah, a lot of strippers back in 08 and 09 took ARMs and, they were going to adjust and that's when it popped, right? Shout out Lehman Brothers, okay? So, adjustable rate mortgage. Okay. Now, technically, there are about 16 types of ARMs. Right now, we're just going to go over the 3, 5, 7, and 10-year ARM. Okay, they can be a 3, 5, 7, and 10, 1, 6, or even the reciprocating year ARM. Okay, so the first number of the 3, 5, 7, and 10-year ARM is the amount of years they're going to be fixed. Okay, so you have the 3, okay, you have the 5, you have the 7, and you have the 10. Okay, now 3-year, what did I just say? It's going to be fixed for the first 3 years. Okay, fixed for 3 years. Now, say it's a 3-1. Every year after that third year, the rate can adjust based on an index and a margin. All right. So there's inherently more risk to a 3-year ARM. You would get a 3-year ARM if, say, you're going to buy a home and you're going to knock it down and build, or you're going to buy a home and then I don't know, you might be dying or something, and you're like, I'll let my family inherit that one, right? Just ignore that. But 3-year ARM. It's fixed for the first 3 years. If it's a 3-1 ARM, it's going to adjust every year after that third year. Okay? 5-year. Hear me out here. It's fixed for the first 5 years. And then if it's a 5-1 ARM, it adjusts every year after that 5th year. Okay? On the 6th year, it can adjust up or down. Now, remember what I said at the beginning of the video. We are in a high rate environment right now. All right? Or relatively high, I want to say. I don't want to be condescending here. So it's not a bad idea, because if it's going to adjust, you would argue it's going to adjust down, no? How much higher can they really go? We'll see how much longer this war goes, right? But who knows, okay? Now I'm going to draw a line in the middle here. Now this is super important. When you take out a 3-year ARM or a 5-year ARM, it's inherently more risk. The initial term is a lot shorter than obviously 7 or 10 years. So what banker lenders do is they don't qualify you at the note rate. All right, say this is actually like 5.25, okay? You might have sweet income and you can qualify for that. But what they do is they add 2 points onto that. Some banks actually add 3, all right, to assess risk, all right? So you're not qualifying at 5.25, you're qualifying at either 7.25 or 8.25%. So although the 3 or 5-year rates can be lower, you might not qualify. So that's why I always lean to going to the 7-year, because the 7-year is inherently going to be better than a 30-year fixed, but it's also a lot easier to qualify because you qualify at the note rate. So today we're at 5 5/8, okay, 5.625, okay? If you get a 7-year ARM, that means you're fixed for the first 7 years. And then if it's a 7-1, 7-6, they even have 7-7s, okay, you'll have 5.625 for the first 7 years, okay? Previous video, remember I said the average life of a loan is 7 years? This is your safest bet, okay? Well, technically this is your safest bet, but for the better rate, do the 7-year ARM. So when you're shopping around, whether you're going to refinance because you bought when the rates were like 8%, a couple years back, was that 2023 when they shot up? Okay. Look at the 7-year ARM. It's a viable option. And here's a little hint. Go to a bank. I promise you now, because the SOFR, secured overnight financing, that's how ARMs are calculated, not off the 10-year treasury, right, or the MBS. So the arms really are a viable option. Okay, they have a negative connotation because of '08 and '09. They can adjust. No one's doubting that, but it's a calculated risk. All right, and then you're gonna have the 10-year arm. Exactly what it sounds like. You're fixed for the first 10 years. Every year there and after, if it's a 10-1 arm, it's gonna adjust every year after that. So in the 11th year, it will adjust. Okay. Then you could have a 3, 5, 7, 10, 6-year arm. Okay, I shouldn't have said year arm there, but that means it adjusts every 6 months. Okay, so instead of adjusting every year there and after the initial fixed rate, it adjusts every 6 months. So when we're talking about risk, you'll see a rate popping up and down. I really never see too many people actually come to term with their arm and it adjusts. I think my cousin Randall, his father took an arm out, it might have adjusted, but either way, the rate was so low it didn't matter. But yeah, I would say the bread and butter when you're going to go for an arm, just ask for the 7. If you qualify for the 5, great, but go for the 7. The rate's going to be lower than the fix, I can guarantee you that. And a 7-year window, where the hell are you going to be in 7 years, right? You have 3 kids, and then you're going to move anyway, so it doesn't matter. So my point is, go for the arm. Your dad might hate it. Ignore his advice. Vietnam, right? It doesn't matter. Listen to your banker. Go to a bank. They're gonna have a good arm rate, and that's Mortgage Bro science on arms. Somewhat risky, but not really. So like and subscribe to the channel. We got more content coming out. Hope that helps.
Get a life, nerd.